In July this year, the Hong Kong Institute of CPAs published the exposure draft of Chapter G of the Code of Ethics. There is professional ethics relevant to anti-money laundering (AML) and counter-terrorist financing (CTF), compliance for accounting professionals, and invites members to provide comments on the exposure draft. We will provide further information about the exposure draft in this webcast. First, I'll start with the background to the exposure draft. Hong Kong AML and CTF Ordinance, or AMLO, was amended in 2018 to extend statutory customer due diligence and record-keeping requirements to designated non-financial businesses and professions, DNFBPs, including accounting professionals. The AMLO defines the Institute as the regulatory body of accounting professionals. To discharge its regulatory responsibilities, the Institute introduced an AML compliance monitoring program within its practice review function in October 2018. For AML compliance, we need to know the Financial Action Task Force, or FATF. FATF is an independent, intergovernmental body which develops and promotes policies to protect the global financial system against money laundering, terrorist financing, and proliferation financing of weapons of mass destruction. The FATF recommendations are recognized as the global AML-CTF standard. Hong Kong is a member of FATF, and Hong Kong government publicly expressed its commitments to support and endorse FATF activities and recommendations. In November 2018, Hong Kong was subject to a mutual evaluation by FATF, which assessed Hong Kong's level of compliance with the FATF recommendations and the effectiveness of its AML system. The Institute participated in the mutual evaluation as the regulator of the accounting profession. In September 2019, FATF issues its mutual evaluation reports on Hong Kong. In its reports, they recommend the Institute to continue to develop an institutional AML risk assessment and a more robust risk-based supervision plan, and to conduct appropriate monitoring and follow-up to ensure compliance by accounting professionals with AML-CTF requirements. In response to the FATF's comments, the Institute needs to find ways to enhance its AML risk-based regulatory program. The FATF requires Hong Kong to provide them with follow-up reports by 2022. In the follow-up reports, the Institute needs to provide data and evidence to demonstrate effective implementation of the FATF recommendations, including enhancement of its AML risk-based supervision program. In order to address the two main comments, that is to do an institutional risk assessment and having effective risk-based monitoring, the Institute has plans to arrange an AML questionnaire to collect information from its constituencies as part of the 2021 annual renewal exercise, to be started in early November this year, so that there will still be time to carry out appropriate institutional assessment and analysis and collect data to support the implementation of its enhanced AML risk-based program in 2021, ready for its reports in 2022. So time is very tight. Let's get back to the basic and give you some background about the problems that the Institute is facing to meet the FATF recommendations. What are the in-scope accountants under FATF? In the FATF recommendations, DNFBPs regarding accountants refer to sole practitioners, partners, and employed professionals within professional firms. It is not meant to include internal professionals that are employees of other types of businesses, nor to professionals working for government agents. The FATF also issued a publication on a risk-based approach for the accounting profession. It recognizes that professional accountants can provide a variety of services, and professional accountants in public practice refer to professional accountants in a professional firm and individual practitioners that provide professional service in respective of functional classification. For example, audit, tax, advisory, and consulting. But AML risks vary among different types of services provided by professional accountants in public practice. So what does this mean in summary? Basically, in scope, accountants under the FATF recommendations cover professional accountants within professional firms that provide professional services to clients. These would be more than those in practice units under the Professional Accountants Ordinance, PAO, that provide primarily audit and assurance services. They, however, do not cover professional accountants working in the commercial sector or for the government. Now let's look at the AMLO's definition of accounting professionals. Accounting professionals include CPAs, practicing and non-practicing, CPA firms, and corporate practices, effectively all Hong Kong ICPA members and practice units. As explained, there are gaps between AMLO and FATF definitions. To make it clear, I have this diagram to show the differences. AMLO covers every CPA and practice unit, including those that work in the commercial and public sectors that do not, by way of business, provide professional services to clients. That is, those falling outside the overlapping area. On the other hand, the FATF recommends monitoring over entities and individuals that provide professional services to clients. There is an overlapping area in the middle that basically deals with CPAs, CPA firms, and corporate practices, which by way of business provide professional services to clients. This overlapping area also covers Hong Kong network firms, as already defined in the Code of Ethics, and professional service entities wholly owned by CPAs and practice units, which we will further explain later on. AMLOS establishes the legal requirements, and its purpose is to give effect to the FATF recommendations. So it's important for the Institute to also make reference to the FATF recommendations in developing its AML supervision plan. Consideration is therefore needed to be given to fill the gap between AMLO and FATF definition of who should be captured in the scope. Let's turn to look at the practice review function under the PAO. As we all know that FATF advocates risk-based supervision and monitoring, meaning spending limited resources to address areas that are assessed to be higher AML risks. Currently under the PAO, practice reviews cover only practice units that primarily provide audit and assurance services that are of comparatively low ML risk, as most of the time, audit and assurance services do not involve specified transactions. Although the Institute's practice review program is set to be risk-based, in respect of AML monitoring work, the program is in fact not risk-based focused, as the institutes can only address the low-risk audit and assurance areas, but not covering professional accountants or professional firms set up by CPAs and practice units, which provide higher MLTF risk-exposed professional services. An example of such high-risk professional service entities is CPA sole proprietorships or CPA partnerships that provide trust or company services. Under the current trust or company service provider TCSP licensing regime, CPA sole proprietorships or CPA partnerships that provide trust or company services are not required to obtain a TCSP license. Professional services carried out through such entities that are not practice units are not subject to regulations by the Companies Registry or the Institute. As explained, there are different definitions in the overall regulatory framework. The Institute decides to identify actionable areas in order to meet its regulatory responsibility on an incremental approach. This means The Institute will use possible means within the Institute's existing authority and power to appropriately regulate its constituents, including gaining information about activities carried out by them in order to determine nature, timing, and extent of supervisory actions. If needed, the Institute will draw Hong Kong government's attention to the regulatory gaps not being able to handled under the Institute's existing authority and power, such that the government can make appropriate decisions as to how to close the gaps, such as to change the PAO or AMLO to meet FATF recommendations. That is ultimately to cover all professional firms set up or controlled by CPAs and practice units to provide professional services. From here, we shall move on to give more details about the exposure draft. That is a starting point on our journey.
The Institute is proposing to use the Code of Ethics to capture the obligations to assist it to discharge its regulatory responsibilities. The Code of Ethics provides the Institute with a means of establishing the obligations of members and practice units concerning AML compliance within the Institute's power in the shortest time frame. Based on the use of the Code of Ethics, the Institute developed Chapter G, Professional Ethics relevant to AML and CTF compliance for accounting professionals. What the Institute is now proposing is to address the FATF recommendations within its current powers and authority over members and practice units and the relevant Hong Kong network and professional service entities. The first obligation to be established through the Code of Ethics is that CPAs and practice units shall provide information, including responses to questionnaires requested by the Institute within the time frame specified. Since the Institute needs to gather sufficient and relevant information to allow it to perform money laundering and terrorist financing risk assessment, there is a need for all members and practice units to respond to the information requested. Procedures are included in the exposure draft in the event that a CPA or a practice unit has a reasonable excuse not to provide the information as required. Another obligation is that those charged with governance of Hong Kong network and professional service entities who are CPAs shall exercise due care to ensure that relevant Hong Kong network and professional service entities comply with applicable AML laws and regulations as if they were a practice unit, and to demonstrate the actions taken when so requested by the Institute, unless the relevant Hong Kong network and professional service entities are regulated by other AML regulators in Hong Kong. In light of the public trust placed on and the standard of integrity expected of accounting professionals, Hong Kong network and professional service entities will be expected by the community to have in place adequate AML and CTF policies, procedures, and controls which are commensurate with those for practice units. The Institute understands that some Hong Kong network and professional service entities are already regulated by another regulator, an example being the Registrar of Companies for TCSP licensees. The Institute plans not to cover these entities because it does not want to duplicate supervisory effort. As mentioned, the Institute will make proposals to fill the gaps arising from the regulatory framework on an incremental basis for the time being. Under the exposure draft, the Institute proposes to cover Hong Kong network and professional service entities, which consists of network firms of practice units located in Hong Kong, and professional service entities whose owners, shareholders, or partners are all CPAs and/or practice units. Network firms are already defined in the existing Code of Ethics, and the existing Code of Ethics contains some requirements for network firms. Therefore, the Institute will cover network firms which are located in Hong Kong. As for professional service entities, the Institute will cover those wholly owned by CPAs and/or practice units, which are both under the Institute's jurisdictions as well as within the definition of accounting professionals in the AMLO. AMLO covers all CPAs and practice units. The Institute defines the professional services to further refine the CPAs that should be covered in the scope, and it took into account a list of services identified by the FATF in its guidance for a risk-based approach for the accounting profession. And those are professional services that require accountancy or related skills. You may be aware that in AMLO, it requires customer due diligence and record-keeping requirements to be carried out by accounting professionals when they, by way of business, prepare for or carry out for client-specified transactions, as these transactions are considered to have higher money laundering or terrorist financing risk exposure. Specified transactions are transaction-based and can exist in the professional services provided by accounting professionals. For example, a professional service entity may provide due diligence service, and if the purpose of an engagement is to assist a client to complete a transaction of buying an entity, this will fall into the scope of one of the specified transactions, that is, buying or selling business entity. For other entities that do not involve work to prepare for or carry out for client-specified transactions, they should still be subject to requirements relating to financial sanctions and suspicious transaction reporting, even though the money laundering or terrorist financing risk exposure of these other entities should be considered less than those involved in specified transactions. Not all professional services provided will be subject to the same level of supervision. Only those that are considered to have higher money laundering or terrorist financing risk exposure, particularly those involved specified transactions, will be subject to a more intensive supervision. The Institute currently does not possess sufficient information about the nature and extent of professional services provided by in-scope constituents. Therefore, the Institute will arrange an AML questionnaire in November 2020 to gather information to understand the nature and extent of services provided by in-scope constituents, such that an institutional risk assessment can be developed for the purposes of determining the nature, timing, and extent of supervisory actions. As we've mentioned, the Institute's proposal is within its current authority and power over members and practice units, and there will be no change in its authority and power under the PAO even after Chapter G becomes effective. In particular, the practice review regime will only cover practice units, and the Institute will not directly inspect Hong Kong network and professional service entities. In other words, the proposals in the exposure draft do not give the Institute any additional power to directly inspect Hong Kong network and professional service entities. But in a practice review, the practice reviewer will assess how well the practice unit ensures its relevant Hong Kong network and professional service entities comply with applicable AML laws and regulations as if they were practice units. Educational element will be added into practice reviews carried out within 6 months after Chapter G becomes effective to draw practice units and their relevant CPA's awareness to their AML obligations. There are a few key points that we want to draw your further attention about the exposure draft. Professional accountants who do not provide professional services to clients by way of business are not captured by the new supervision arrangements. In practice, they will be required to respond to questionnaires to confirm their status, but do not need to provide AML-CTF information. The exposure draft, when it becomes effective, does not change the existing legislation. In particular, the practice review function under the existing PAO covers only practice units, and the Institute will only through CPAs and practice units gain information about but not directly inspect Hong Kong network and professional service entities after Chapter G becomes effective. In order to discharge the responsibilities as the AML regulator of accounting professionals in Hong Kong, the Institute will need to collect AML-CTF information from members and practice units to understand the nature and extent of professional services that they and their Hong Kong network and professional service entities provide to determine the nature, timing, and extent of supervisory actions. The frequency and intensity of supervisory actions will depend on money laundering or terrorist financing risk profile of in-scope constituents. One determination factor will be the extent of involvement in specified transactions, to which both AMLO and FATF recommendations require special attention. Members are reminded that the due date of submission of written comments on the exposure draft has been extended to 20th of October 2020. Comments can be sent to the Institute by mail, fax, or email.